The Money Show.
Personal Finance with Warren Ingram.
Warren is a director at Galileo Capital. He's a personal financial advisor and a regular contributor to the Thursday evening edition of The Money Show, where we talk personal finance. Tonight, one we've discussed a long time ago and inferred and referred to many times since, Warren, and that is whether or not it's better to buy a home or pay rent. Give me the key points on this one, because it's quite a contentious and emotive issue, and we know that emotions and investing should never inhabit the same space.
You're right, Bruce, and I think there's an overlaying kind of additional set of emotions on this one, and that's the sense of security and stability that a lot of us get from from owning our own little castle, and it's very hard to overestimate the emotional impact of that sense of security, and so I think just to kick off there, when we all grow up, most of us, our parents or our grandparents, or our broader kind of social circle will tell us, when you get a job, make sure you set aside some money, and then buy your first home. Don't pay off the landlord's bond. Rather pay off your own. And build up that asset. It's never, don't wait too long and get going. And for me, that was, kind of growing up, that was certainly what I heard. And eventually, I started to test that assumption with real numbers rather than just, what everyone tells us. And after having kind of, cut up this scenario multiple different ways and cut and dice it as many ways as I possibly could, what I realized is I should just listen to my wife. If she says we need to buy a house, I must just do that. And that means I have a very long and happy marriage, but maybe not the best financial decision.
Okay, but we're talking purely financial decisions here, because the joy of having your own home is you can choose to renovate it if you choose to. You can choose to plant cabbages in the flower beds if you want to. You can choose to let the lawn die if you want to. That's yours. If you have a landlord, you have fewer options. There's less optionality. But let's just talk numbers here, Warren. Let's talk
pure numbers
and help it here.
Pure numbers, to me, it makes sense that if you find the house that you are going to live in, and I mean, there's no guarantee in life, but knowing everything you know today, if you find the house that you're going to live in for at least an 8-year period or longer, I think it does make sense to buy. And the reason for that is when you buy and sell properties over a shorter period of time than that, what happens is you end up incurring enormous sets of costs. So you pay quite a few costs on the way in, because almost the entire world can't buy a house cash, which means you're going to have to get a mortgage. And if you get a mortgage, that means you need to pay the attorneys for registering the mortgage. You're going to need to pay the bank for the mortgage origination fees, and then you're going to have to start actually incurring the transaction charges that go along with owning a mortgage. The interest rates, all of those things. Then the rates and taxes, are yours now because you own the property. Then the maintenance and all of those things, and then on the way out, you're going to have to, at least pay probably around 5%, or 3 to 5% estate agents' fees to sell the property. There might be some transfer duty somewhere along the line. So what you end up with are really quite big costs on buying and selling a home. And doing that over periods of 8 years or less than 8 years, for me, the numbers just don't stack up. And I think one thing to understand about the numbers around residential property is, I've tried to track this from as far back as I can, which is somewhere around the 1960s, and since the 1960s to now, residential property tends to grow at about 1 to 2, and if you're really lucky, 3% a year above inflation, and that's before costs. So the moment you take off any kind of rates, maintenance, transaction costs, I'm going to argue that you're at best with residential property over long periods of time, you're just tracking inflation. And contrast that with the stock market, for example. You just buy the index, and you're even with all the things that have gone on in the last few years, and possibly 15 years in South Africa, you get around 6.8% a year above inflation. And it's really cheap to buy an index. It doesn't cost you much to go in, and it doesn't cost you much to go out, and certainly no rates and taxes and maintenance and all of those things to hold an index. So, if you contrast just buying a home versus, paying rent and then saving the balance and putting in the stock market, it makes sense to me that you should be a very happy renter if you're going to move properties every few years. And I think we tend to think that we're going to buy a home and live in it forever, but that's not the case. Most of us, we start out, we move in a very small place, we stack it up, we get bigger, then we get families, so we buy the big home, and then what happens is at some point the kids leave, and then you're in a massive home with two or one person, and then you go downscale again. So actually, we end up selling properties a lot over a normal lifetime.
Okay, but let's look at some practicalities here, Warren. I buy a house and I pay R1 million for it in a nice suburb in Johannesburg. 10 years ago, I had a conversation with Herschel Javits at Javits Properties fairly recently. We were talking about municipal property valuations. And the one thing that keeps going up in terms of valuations is municipal property valuations, because the higher the municipal value is, the greater charges they can levy on you as a ratepayer. But he was saying that, in real terms, property prices have actually not moved in Johannesburg, in large parts of Johannesburg, for many years. So the R1 million that you agreed to pay for this property 10 years ago is worth considerably less in terms of what's called the time value of money than it was. It hasn't kept up with inflation. So the value of your money has depreciated over a time that the asset has not grown in value, where you've been incurring the costs of running and maintaining the bottomless pit called a house. And you actually, there are so many calculations that you need to do when it comes to making an investment of any kind. And that is the real value of the asset that I sell when I'm ready to sell it, has it kept up with inflation? And certainly property in South Africa, most property in most parts of South Africa, has not done that. Certainly not for the last decade.
It hasn't, and I can certainly imagine a bunch of estate agents right now, who operate in the Western Cape, saying no, but hang on, we've had a great property market here, we're doing fine, and again, that's a province, and not even the whole province. It's segments of that province that are seeing performance. And if you look at Johannesburg in the late 90s, there was also a time when the property prices were booming here as well. And just for context, that doesn't mean what you're saying is 100%. And so don't forget, it's a big country. There'll always be little pockets where houses do go up, and we're certainly not saying all houses everywhere have gone down over a decade, but certainly across the country, if you took an average, the average is really not good at all, and it's particularly bad when you start looking at the more valuable properties. So a property that an apartment, let's say, that costs 700,000 rand, they haven't done too badly, Bruce. But the 20 million rand house you could probably sell for 10 now. And it's that big discrepancy. So averages are hiding some really intricate stories here, but it doesn't change the fact that owning a home, your cost of ownership is going up really quickly over and above rates. There are kind of hidden taxes, I'd like to call them, from the municipalities. And I think the Western Cape, they started this, and now all the other municipalities are following. So, homeowners would tell you, if they look at the cost of refuse and sewage collection and all of those things, those are not big numbers, a decade or 2 decades ago. But if you look at how quickly those have accelerated, they've gone up really quickly. And then, the home maintenance costs are going up, exorbitantly, because, the cost of building materials and the like have also gone up through the roof.
So there's the other side of this thing. Now, replacement costs of property, Warren, to build versus to buy is another debate altogether. But building costs, you've got to buy the land, you've got to get the property zoned, you've got to get the architect to draw the plan, you've got to get the council to pass the plan, you've got to get the builder to come and rebuild, and then do waterproofing 6 times, and then you get a house. And I think that at some point, the value of building will it may already be higher than buying. You get exactly what you want. But again, you're in the trap of home ownership. In a moment, let's talk about the risks and the benefits of renting. We've been focusing on buying, and right now, I never want to own another house again. but let's see whether or not I want to rent anything again. You've got to live somewhere, so let's talk rentals in a moment with Warren.
The Money Show.
Personal Finance with Warren Ingram.
What did our parents tell us? Rent is money down the drain. You need to own your house. You need to own your future. You can't be relying on the vagaries of a landlord who could evict you at a moment's notice, a landlord that may not upgrade the property, may not look after maintenance, a landlord that when you do move out one day starts charging you for hanging pictures, and because there was a hole in the wall you get charged, you lose your deposit. Landlords are evil, we're told. So why would you ever rent? Warren, make the case for renting.
Well, I think there are a couple of big assumptions there which we need to challenge as well. But making the case for renting, one thing you need to know is that you're simply paying a fixed amount. There are no surprises that come with renting a property. So you're not responsible for the property taxes. You're not responsible for maintenance. You're not responsible for anything except the things you consume and the rent. And things you would consume would generally be water and electricity, and then your rent. And so your fixed costs are known and you can deal with them. And the ones that aren't known, if, for example, electricity, those are things that you can control by, Eskom's controlling it for you now. You can't use it anyway. But in normal course of business, you can control how much electricity you use. So the nice thing about that is when you start renting, typically the cost of renting versus the cost of owning the exact same property, the rental is significantly lower. And there the trick is when you then rent a property and you need to say, well, I would have been paying an extra 3,000 or 8,000 Rand a month for owning this property. That money I need to set aside and save and invest for the long term. So don't just spend that kind of gap between the cost of your accommodation as a renter versus the cost of your accommodation as an owner, because that's a big number that you need to put into this whole calculation. Is you need to actually keep saving and keep investing. But the reality then is that when you get onto this property ladder where you start, wanting a bigger place, that's a relatively easy thing to do. You go to the landlord at the end of your lease and you negotiate your exit, stick to the agreement and move on. There should be no other costs, and you carry on scaling up the property as life goes and scaling down, at another stage of life. And if you happen to be, on the semigration, train where you're saying, well, it's time for me to move provinces, you simply end your lease when it's due and you move. You're not stuck in a position where you've got a house that's, worth less than you paid for it 15 years ago, which is the case for a lot of people in Johannesburg. You simply pack up and go. And so I think if you are reasonably flexible in your schedule in terms of, you might want to move a bit more regularly than most, then there is no downside as far as I'm concerned to renting. Those assumptions that people make around bad landlords, clearly there are bad landlords. That's a reality. I think it's a kind of a false assumption for a lot of people to say that, I don't want to rent because the landlord's going to move me. The truth is you need to do some due diligence on your landlord. I always find, have a conversation with the landlord before you sign the lease and find out how many other properties the landlord has, how much experience has the landlord got with renting out properties to tenants. Because if a landlord's got 3, 5, 10 properties, what they really want is a tenant to move in and stay there for the next 10 years. And so what they will do is they will make sure that between the two of you are both happy for as long as possible. Yeah. And so forming a good relationship with a solid landlord is really important. If you don't do the due diligence on the landlord and it's somebody who has, just simply got one rental property and actually probably moved out because they're in financial distress, then they're the person that's not going to do the maintenance for you, etc. And then your nightmare does start. And I agree, then you've got the issue. But using the threat of a landlord moving you, I mean, understand, okay, landlords want tenants for long periods of time, the good ones. And that's what you've got to do, is find the right property with the right landlord. I mean, I had a fantastic relationship with my landlord, and I only moved out because we had to buy the house because, the happy wife story.
No, exactly. You were told. You were instructed. Didn't come down to a financial decision at that point. It was a case of, we want a garden. We get to plant flowers, and I want to plant the flowers I want to plant, and they're my flowers and my bushes, and that's why you did it. And that's also a very good reason, frankly, to make that decision. A lifestyle choice it can also be a good choice, provided you don't overinvest, overcapitalize, and get trapped in a property over the long term. The argument on rental, though, in terms of rental versus buying, the idea that buying a property is a forced saving. And I like this idea for many people, because if you're renting, you'd better be bloody investing on the sidelines, because you're going to have no asset to sell one day if you've been renting and living the high life and spending your weekends, in 5-star hotels and all that sort of stuff. If you're not disciplined on the investment front, this is the time where I would encourage people to buy a home, because it forces you, for better or for worse, to at least have an asset of value that you can flog one day.
You hope you can flog one day. I think you make a great point. Actually, I agree with you 100%. It's people that know themselves well enough to know that they are going to just blow the money that they've got left in their bank account every month. Then those are the ones that, if they're not drowning in debt at the time, take that cash flow, commit it to an asset. You hope, over the next decade that, your property at least maintains value with inflation. And as you say, Bruce, you've got an asset, to your name. And if it's slightly bigger than what you needed, maybe one day when you retire, you can, scale down, and you've got an investment asset that you can then use to realize some of that money to live, and some, to kind of provide an income. So I think for people that know themselves, it is a great point. That is the time, but you would encourage them to buy, as long as they're disciplined enough to pay off the mortgage, every single month.
No, I think, on that basis, I mean, the idea, the costs of running your own home are extraordinarily high, and they're not going to go down ever. The costs of rental, of course, you don't have as much control, but you do have some certainty in what your monthly costs will be. But then you better be flippin' disciplined and make sure that you've got good investments happening on the side of that arrangement. And also, don't rent, like you shouldn't buy up to the max. You shouldn't be renting up to the max. You need to make sure that you've got financial flexibility, and that you do the best deal for yourself and your family. Warren Ingram, we haven't got to the question that Tabiso sent to us this evening, but I just thought this property story was too important. Please hold over this Tabiso's question, because I do want to get to it next week. It's really about buying cars. And I think, actually, looking at Tabiso's question, it's a whole topic all of its own, in terms of actually how to choose how much money to spend on a car, because I think that is a valuable conversation. Let's do that next week. Warren Ingram at Galileo Capital. Thank you.